Hello everyone, hope you all are doing well. So, today we are going to start with our subject income tax law and practices. So, under this head, we will discuss various topics, instances of agriculture or agro income, instances of non agricultural, non agro income, treatment of partly agricultural or partly non-agricultural income under Rule 7 of Income Tax Act, and in last we will discuss about impact of agricultural income on tax computation. So let's start with the topic agricultural income. So first we will discuss about the meaning of agricultural income. So by virtue of section 2 subsection 1a, agricultural income means any rent or revenue derived from a land which is situated in India and is used for agriculture purposes. For tax point of view, we have to consider the main points in this line. That is, rent may be in cash or in kind. Assessee may be the owner or tenant of such land. Second point, any income derived from such land by agriculture. Next, any income derived from such land by the performance by a cultivator, a receiver of rent in kind of any process ordinarily employed by them to render the produce raised or received by him to be taken to market. Also, any income derived from such land by the sale by a cultivator of the produce raised by him or receiver of rent in kind of the produce received by him, in respect of which no process has been performed other than a process required to render it for the market. For the tax point purpose, we have to consider the thing that the process must be employed only to convert the produce or rent in kind in marketable form. If marketing process is performed on the produce or rent in kind, which can be sold in its raw form in market, then income derived from such product is partly agricultural and partly non-agricultural income. Also, we can say any income derived from a building subject to fulfillment of the following conditions. Condition 1. The building should be occupied by the cultivator or receiver of rent in. Second condition, the building should be on or in immediate vicinity of the land being situated in India and used for agriculture purposes. Third condition, the building should be used as dwelling house or storehouse or other outbuilding. Another condition, the land is either situated in rural area or urban area and assessed to land revenue or local rates. For tax point purpose, we have to consider the following points. Where such a land or building is used for non-agriculture purpose, then any income derived from such land or building shall not be treated as agriculture income. Next, agriculture derived from land being let out for storing crop shall not be agriculture income. Building should be owned and occupied by the landholder if he receives rent or revenue from the land. On the other hand, in case of cultivator or receiver of rent in kind, it is enough that building is accepted or occupied by him. So we have to keep in mind some points regarding agriculture income, like profit on transfer of agricultural land. Profit on transfer of agricultural land shall not be treated as agricultural income. Agriculture or agricultural operations or agriculture processes are defined under the Act of Income Tax Act. Accordingly, for the purpose, agricultural activity is divided into two parts. First part, basic operations. Second part, subsequent operations. If we talk about basic operations, it means application of human skill and labor upon the land prior to germination. Example, tilling of land, sowing of seeds, planting, irrigation, etc. For tax point purpose, we have to consider Any spontaneous growth from land itself, that is without any human effort, cannot be termed as agricultural operations. Second agriculture activity is subsequent operation. It means operations which fosters the growth and preserves the produce for rendering the produce till for sale in market, and which are performed after the produce sprouts from the land. Example: digging the soil around the growth, removal of undesirable undergrowths, weeding, landing, pruning, cutting, harvesting, etc. Moving further, now we will talk about instances or examples of agricultural or agro income. There are several instances or examples which are treated as agriculture income. Point 1: income from growing trade or commercial products like jute, cotton, etc. is an agro income. Second, income from growing flowers and creepers is an agro income. Third, plants sold in pots are an agro income provided basic operations are performed. Fourth, remuneration and interest to partner. Any remuneration, salary, commission, etc. received by a partner from a firm engaged in agricultural operations is an agro income. Interest on capital received by a partner from a firm engaged in agricultural operations is an agro income. Fifth point: income arising by sale of trees, growth on denuded parts of the forest after replanting and by carrying on subsequent operations is an agro income. Next, compensation received from insurance company for damage caused by hailstorm to the green leaf of the SSE's tea garden is agriculture income. Next, any fee derived from land used for grazing of cattle being used for agricultural operation is an agro income. Any income derived from saplings or seedlings grown in a nursery shall be deemed to be agriculture income. So students, we discussed 8 points as an instances of agriculture agro income. The motive behind these instances to make you aware about the various sources of income of farmer which is treated to be as agriculture income. Now moving further, now we will discuss about the instances of non-agricultural, non-agro income. So, moving ahead, first point is salary received by an employee from any business having agricultural income is non-agro income. Next, dividend received from a company engaged in agricultural operation is non-agro income. Next, income from salt produced by flooding the land with seawater is non-agro income. Next, income from fisheries, poultry farming, dairy farming, butter and cheese making is non-agro income. Next, breeding and rearing of livestock is non-agro income. Next, interest received by a moneylender in the form of agricultural produce is non-agro income. Moving ahead, profit on sale of standing crops after harvesting is non-agro income. Remuneration to a director or managing director from a company engaged in agriculture business is non-agro income. Income earned by a cultivator from conversion of sugarcane raised on own land to jaggery is non-agro income to the extent to which income is related to such conversion only. This is because sugarcane itself is marketable. Moving ahead, next, interest on arrears of rent receivable in respect of agricultural land is non-agro income. Income from land situated outside India is not agro income. Annually received by a person in consideration of transfer of agricultural land is non-agro income. Income on supply of water for agriculture operations is non-agro income. Income from scale of trees and grasses grown spontaneously without any human effort is non-agro income. So students, we have discussed some points or instances of agriculture income. Then we have discussed some points or instances of non-agriculture, non-agro income. The motive behind this is to make you understand about the facts or points or examples or various types of income which could be treated as agriculture income or non-agriculture, because calculating the agriculture income for the income tax purpose can only be possible if we can bifurcate between the agro income and the non-agro income. Moving further, now there are so many other examples which can be treated as partly agriculture or partly non-agriculture income. To understand this, now we have a chart in this PowerPoint presentation which clearly explain you that which portion and how much portion of the income is to be treated as agriculture income and non-agriculture income. In case of assessee is engaged in an integrated activity comprising of agriculture activity as well as non-agriculture activity, then profit of such integrated activity shall be segregated into agriculture income and non-agriculture income in the following manner. So, in the slide, you can see there are four columns. First column is rule, second column is case, third column is agriculture income, and fourth column is non-agriculture income. In the column rule, you can see that there is written numbers like 8, 7A, 7B. So these are the rules under Income Tax Act, and under the head case, you will see the examples and calculations that how can we segregate one's income into agriculture income and non-agriculture income. So, moving further, Rule 8, assessees is engaged in the business of growing and manufacturing tea in India. So, as per the rule, 60% of income will be treated as agriculture income and 40% will be treated as non-agriculture income. In the slide, you will see the example. If an assessee earns 5 lakh as per section 28 from the business of growing and manufacturing tea in India, then his business income will be rupees 2 lakh, that is 40% of 5 lakh, and agro income will be rupees 3 lakh, that is 60% of 5 lakh. So the non-agriculture income is 40% and agriculture income is 60%. Moving further, in the second case, Rule 7A, assessees is engaged in the business of growing and manufacturing rubber in India. If someone is manufacturing rubber, then 65% of the income will be treated as agriculture income and 35% income will be treated as non-agriculture income. Assessees engaged in the business of growing and manufacturing coffee in India also covered in the same example. Now, moving ahead, 7B, subsection 1, coffee grown and cured by the seller in India. Then 75% of income will be agriculture income and 25% income will be non-agriculture income. These percentage will be calculated as shown in the example in first case. Moving further, 7B, 1A, coffee grown, cured, roasted and grounded by the seller in India with or without mixing shikori or other flavoring ingredients. In that case, 60% of the income will be treated as agriculture and 40% income will be treated as non-agriculture income. Friends, you can see in the last of this slide, it is written that salary and interest received by a partner from a firm growing and manufacturing tea, coffee or rubber. Such remuneration or interest shall be treated as partly agriculture income and partly business income as stated above. So hope you will understand that if we are in the business of growing and manufacturing tea, rubber, coffee, then 100% portion is not be taxable as agriculture income. There are certain percentages which are mentioned here. We have to do the treatment as mentioned in the rules given or provided by the Income Tax Act 1960. Moving ahead, for computing agriculture income from a business having both agricultural as well as non-agricultural income, assessee is required to prepare two profit or loss statements, one for agro business and another for non-agro business. Agro expenses debited to agro profit or loss and non-agro expenses shall be debited to non-agro business profit or loss. Market value of any agriculture produce which is utilized as raw material in such businesses is to be treated as income for agro business and expenditure for non-agro business. Moving ahead, now we will discuss about impact of agriculture income on tax computation. Section 10, subsection 1 of the Act exempts agriculture income from tax as our constitution does not provide power to the parliament to levy tax on agro or agriculture income. However, since 1973, an indirect method has been found to levy tax on agro income. According to this method, agriculture income is included in the total income of assessee for deciding the tax slab of the assessee. The way to apply higher rate of tax slab on agro and non-agricultural income by including agriculture income in the total income of the assessee are: first point, the assessee is an individual, a Hindu undivided family, a body of individual, an association of person, or an artificial judiciary person. Basically, this is the condition for including agricultural income in the total income of the assessee. So, if an individual is belongs or fulfill these conditions, then agriculture income will be treated as the part of total income. Second condition is the assessee has non-agricultural income exceeding the maximum amount of exemption, that is the case of senior citizen rupees 3 lakh, super senior citizen 5 lakh. In case of other individual HUF, AOP, BOI, artificial judicial person rupees 2 lakh 50,000. The agriculture income of the assessee exceeds rupees 5,000. So these are the conditions under which agriculture income will be treated as the part of total income of the assessee. Now, if we talk about the treatment of computation of income tax, we have to fulfill three steps. Step 1, compute income tax on total income of assessee including agro income. Step 2, compute income tax on agro income plus maximum exempted limit. Step 3, tax liability before equals to tax as per step 1 minus tax as per step 2. So moving ahead, we have point regarding how to calculate the tax liability on a person who is having non-agri business and agri business with him. For example, Mr. X, a 42 years person, has non-agro income of 3,25,000 and agro income of 2,55,000. Then in that case, what is the tax liability of that person? So as per the steps we've discussed, income tax on rupees 5,80,000, that is 2,50,000, 55,000 plus 3,25,000 will be 28,500. Tax on 5,05,000 will be 13,500. Total tax liability will be 15,000. If we give the rebate on the tax liability, then the actual amount will be 2,500, which is taxable. Hope students, you are clear with these things. Now moving ahead, conditions for including agriculture income in the total income of assessee. As we know that we have included HUF, body of individual, association of persons. If the agriculture income exceeds 5,000, then in these conditions we will include all the agriculture income in the total income of the assessee. So thank you students for being with us. Have a good day.